Greenlam reported a healthy set of numbers in the third quarter. Plywood maker saw its net profit rise 45% in October to the December quarter. Margins also improved. But the question is, can demand sustain and improve? Joining us now with the answer is the company's MD and CEO, Saurabh Mittal. Saurabh, good having you. Thanks much for joining in. Good numbers.
Hi,
congratulations. First, a bit on the demand environment, then we'll get to the margins. How have the volumes looked like, and what do you anticipate the near term to throw up?
So firstly, let me tell you, we're not a plywood maker. Laminates is a core business, so we are more laminates than ply. So on the volume front, in the last quarter, we've had about, in the core business, which is laminates, we've had about 7 to 8% of volume growth, which is primarily coming from the export markets. The domestic market has been flattish. In the veneer and allied category, we've had volume growth in the flooring business and the door business. The decorative veneer panel business has been, actually we've had a small degrowth in that business. So that's on the quarter three performance. As far as demand conditions are concerned, so demand conditions continue to be challenging. And so really, what's going to happen to demand, I'm not sure on that. But as far as we are concerned as a company, I think our efforts of continuous network expansion, working with specifiers in the domestic market, globally expanding our market reach, working with customers, developing new products. So I think that continues. So really, I think we are more focused on, what we are doing rather than really what the overall, noise and the market environment, we see.
Okay. How does this kind of demand expectation and, for lack of a better word, uncertainty around what the demand will likely be, augur for the operational metrics? Because you've shown some positives out there. Can these sustain or improve?
So I'm not sure whether they can sustain or not, Our efforts, like I said, across the business, is completely there. We are very focused on, building a good business. And so it really depends, So if you see the results of quarter three, despite the fact that demand was not so great, the domestic business, was kind of subdued. We still managed to improve our pricing realization. We improved our value mix, and which is more of a continuous effort, over the last few years. It's not something which has happened in a quarter. So really, I think our efforts will be there, and probably, we should try and sustain this level of performance. Whether it can improve or not, and I'm not sure on that right now.
But this 15% margins, you believe they could be sustained within a band of maybe 100 basis points, but this could be sustainable. Am I getting it correct? You can't be. Okay.
That's our effort. So if you look at the margin in the core business in laminates, so we've done about 18.5% EBITDA margins. Our new businesses continue to lose money, and that's dragging down the performance, of the margins. So the veneer business is largely flattish. We literally made no money at the operating level in the decorative veneer and allied category. Although the veneer panel business had a 13.5%, operating margin, but the flooring and door business still lost money. So overall, yes, I think these numbers you're seeing, is where the two new businesses are still, losing money at the EBITDA level. So we should be able to sustain these margins.
The laminate exports have been gaining traction. How did they do in the third quarter? How do you anticipate them to do going ahead?
So the laminates business in the third quarter did reasonably well. We did about 25% rupee term value growth. In quantity, we grew about 20%. So I think it will continue to do well in the future too. We are the largest exporters from the country. We have a good network internationally. We have a good product lineup. Supply chain is very efficient. So I think we should be able to do well in the future too.
Okay. Just wondering, one is what happens to the EBITDA margins, and that will be a factor of a number of things. But the 190 basis points gross margin expansion that you showed, because of the categorization, I think the premium category products went up and raw material costs came down. Now I can understand raw material costs might be unpredictable, but the composition of your sales would be in your hands. Would you reckon that there will be a further push towards premium products?
So like I said earlier, this is something which is a strategy of the company to keep driving the volume and the value mix. So introduction of new products, pricing discipline is very important, and I think we've behaved very well on that front. So I think the gross margin improvement is a function of better product mix. If you see, our realization growth has been nearly 5%, in a market which I believe most people have been discounting products, which is a function of pricing discipline and better value mix and continued efforts towards focusing on getting better products to the customers, and really not just focus on cost leadership, but also product leadership, market leadership. So I think that will continue. What impact it'll have in 1 quarter, 2 quarters, I cannot say that, but the direction is there. Yes.